Hi, Carmen from the Cadence Group. Today is your lucky day. We're started to personally interview some of our preferred lenders. We're going to bring them to you personally. Meet Mark Copland at Mortgage One. And we're going to focus a little bit today on new buyers and some of the steps you're going to need to get to the other side. So Mark, I'm coming in and I'm a new buyer. I'm worried. What do I have to have for you?
Well, it's pretty simple. It's actually gotten a lot easier these days with the COVID, the advent of everything going digital so much. A digital application makes it really easy. Most lenders, including us, we have a mobile app. So the first thing really for people to do is fill out our application. It's really easy to get through. Most people get through it in 5 to 10 minutes. It's stuff you should know off the top of your head. Then we're going to ask that you upload a few documents. Pretty basic stuff for most people. W-2s, pay stubs, bank statements, and a driver's license so we can prove your identity. Once we have all that information, we're going to do a soft credit check. There is a difference between a soft credit check and a hard credit check. The reason we start off with a soft credit check is because we want to be able to advise people on their credit and ways to improve their credit for different loan options available to them without any negative impact. A lot of people perceive a hard credit check as being a ding on your credit.
Yeah. So that place that I'm going to upload all my documents instead of it's safe, but I don't have to worry about identity be stolen or anything like that.
Well, absolutely, at 100%.
If I could encrypt it,
Okay. Yeah, and the mobile app we have, you can upload documents right through the mobile app. If anybody has, you can use your phone as a scanner even to scan multi-page documents. Some people still get paper bank statements. Your driver's license, you just put take a picture of your driver's license with your phone and put that up through the portal. And then if people don't have access to the mobile app or don't want to do it, those people that are a little less technologically savvy, so to speak, we do have a secure portal where they can upload documents separately in a secure encrypted portal instead of going through the app, because some people just do it on the website instead of through the mobile app, and that would give them the ability to do.
Should people pull their credit from Credit Karma first and then send it to you, or is that part of your soft check?
So I advise everybody to monitor their credit, whether it's through Credit Karma or some other service. Those services are all free for a reason. We want to market to you.
Sure.
The problem with those services is the credit scores are not the same as what a lender's going to get. Yeah. So every purpose for pulling a credit report is specific, and there's several different scoring models. So when
it's very different for a mortgage than it is for a call.
Yeah.
This
credit card and then if you're pulling your credit as a consumer and you're getting your scores through Credit Karma or something like that, there's no what we call overlays. The scoring system is totally different. So you're going to get it. A lot of times people will tell us, and it could be either way. A lot of people will come to me and they'll say, yeah, my credit score is 680. I pull it in 660, or I pull it in at 720. It could be very, very far off. Okay. That's the other reason we do that soft credit check. Consumers were coming to us and asking more and more, are you going to do a hard credit check? Are you going to do the hard credit check? So the doing the soft credit check primarily allows us to look at things, and then we can also advise the client if they can approve the scores pretty easily. We can tell them pay down this credit card, or a big one now is medical collections. A lot of people don't know.
Yeah.
Medical collections now, all of the credit bureaus came out last year and said, when a medical collection is paid off, we're going to remove it from the credit report. We've been struggling to try and get that to happen for years. They finally came.
That's huge.
It's huge. Because you could have somebody with an 800 credit score. They get a $50 medical correction from a deductible that they didn't get the thing in the mail. They didn't pay the deductible. It goes to collection, and it drops to 400 points. Yeah. And all of a sudden, you've got somebody that maybe was a 750 and now is a 680, and that can have a huge impact on the credit score, the loan type, a lot of things. Costs of mortgage insurance, everything. Down the road, buying a car. even, anything you want to finance, your credit score is key.
We learned even car insurance is based on credit score.
It is an art, yeah. Car insurance, home insurance, they pull your credit. It's a different type of credit scoring model, but yeah, it's...
Other than medical bills, where do you see the things that kind of hit on people?
Student loans.
Okay.
I've seen a lot of people that didn't know their student loans went into repayment when they initially went into repayment. We haven't run into that the last few years because of COVID.
Okay.
The government went through and said, forbearance, which means nobody has to make payments.
Right.
So ever since COVID started, nobody's had to make payments on their student loans, so nobody's late.
That's the upside.
So we'll see what happens when, I think they were talking about May.
Okay. Is the debt still factored in? The outstanding student debt? Or?
Yeah, it is. So we've got a few different ways to calculate that, depending on loan product.
It's a lot better, isn't it, than it used to?
It is. It's gotten better. It was very restrictive up front. So conventional mortgages is Fannie Mae and Freddie Mac. Fannie Mae says we use 1% of the balance as the fee. Freddie Mac says we use 0.5% of the balance as the payment. Great. And FHA says we use 0.5% of the balance as the payment. Now this is where it gets a little convoluted. Fannie Mae says we can use an income-based repayment plan. So if they take the loan out of forbearance and go into an income-based repayment plan, we can use whatever that payment is, even if it's zero.
Ah, nice.
With Freddie Mac and FHA, the payment has to be above zero for us to use that. If the payment is zero on the income-based repayment plan, we have to revert to the 0.5% calculation. I know that's a lot, but
that's why I don't go down this rabbit hole or this lane.
Yeah.
We really need to talk to a pro and someone who does this every day. The loan programs are changing. We were just talking, you were saying there new programs are implemented the month after. So
yeah, it is constantly changing. And it's important to get with a lender that has your best interest in mind.
Absolutely.
We love working with first-time buyers. The one thing I do like educating first-time buyers about is property taxes. So they've talked about this, where somebody buys a house this year, they get the seller's taxable value this whole year. Next year, the cap comes off the seller's taxable value, and most lenders don't talk about it.
Right.
A lot of realtors talk about it. Most lenders don't talk about it. I have this conversation with every single buyer, whether they're an old buyer, a repeat buyer or a new buyer. It's something that I feel is very important to go through.
And because you do that, I don't get the call later when the new tax bill comes in and people are eating macaroni and cheese forever and feeling like you were super uninformed.
Yeah.
So that's a big proponent when you're looking and shopping and knowing your numbers. They're changing.
It's what they're voting for.
That's right.
The main point of why I do this is I want to tell people, this is the payment you're going to have this year. This is the payment you want to budget for later. It's not an exact science, but I've gotten pretty good over the years at guesstimating what that future taxable value is going to be next year. So I tell them that any house I price out for people, it has that future tax calculation on it. So they could see that this is what I'm estimating you're going to budget for in the future.
Wow.
And then finally, I invite every client, and I remind them of this 3 times during the process. I invite everybody to put a note on their calendar for March of next year. So Marches are always busy for me. I have them put a note on their calendar for March of the following year to send me the notice of taxable value. And then I can do that calculation for them and let them show them how to get in front of an escrow account shortage.
So there's a lot to take in, but there's a lot of good news in the lending industry and a lot of options. This is the prime reason we stay local. It makes a difference. It gets your offers accepted. We really choose carefully when we pair with our vendors. So I'm encouraging you, for either one of us, drop us a note, email us. Mark's contact information will be below the video and on our site. He's definitely in our homebuyers packet, so I'm not going to go wrong. And both of us, our goal is the long term. It's the 3 to 5 year plan. I want you to call me back when your family grows. when life changes or you have a second home in mind, because we built such a solid foundation in the beginning. Marcus the same way. When it's time to refinance or the rates are dropping and you're sitting in some equity, he's going to be in touch with you, letting you know what all of your options are. So, we're in it to get it. Great script. Thanks, Zach.